How much would it cost for you to risk everything that you know and love and betray the ones closest to you? For one man, $64 billion is that number.
Money. It's the root of all evil.
You're listening to the Evil Money Podcast. I'm James.
And I'm Hannah.
And we're here for you every Thursday, breaking down cases that meet at the intersection of money and morality. So smash that subscribe button and let's get started. In today's episode, we will dive into the rise and fall of one of the most infamous figures in financial history, Bernie Madoff. Madoff's story is one of deception, ambition, and utter betrayal. We'll be discussing how Madoff built a reputation of trust, the techniques he used to perpetrate his scam, the devastating effects on victims, and the eventual unraveling of his empire.
So you're taking the lead on this episode, which is exciting because I actually don't know much about Bernie Madoff. I know his name, but I'm excited to learn more about this case.
Excellent, because that was my very next question is, what do you know about Bernie Madoff?
Yeah, very little. I know he's responsible for a Ponzi scheme. I actually transparently don't even know what that is. So I have some questions about that. I even watched the documentary, but I think I have short-term memory loss because I can't really remember what happened.
Yeah, I can relate with you there. I actually, during my research, had to figure out what a Ponzi scheme was for myself. So I'm hoping that during this, talk, I can help fill you in on a lot of these things.
And our audience.
Let's get into it. Born in 1938 to Jewish immigrants in Queens, New York, Bernie always saw himself as a protector. In high school, he met Ruth Alpern at a party in his friend's basement, and they became high school sweethearts. When she graduated from high school, Ruth went to college, which was very unusual for women at that time. And her father, Sal Alpern, ran a successful accounting business in New York, so she had something to look up to.
That's good that she had a father who supported her, though, because it's one thing to have, a father who believes in your daughter. It's one thing for a father to say they believe in their daughter, but at that time, it's nice that he actually supported her going to college.
Yeah, he not only supported her, but he also thought that Bernie wasn't man enough for her.
Ooh.
Yeah, and Bernie's father himself, he actually hoped that Bernie would become a lawyer.
Oh.
So there was a lot of people looking at Bernie as in he's not making a name for himself at this moment.
Dang, I kind of feel for him.
Yeah, he ended up going to law school for a little bit, but then after about a year or so, he ended up dropping out because it just wasn't for him, which is understandable.
Yeah, a lot of people have done that.
Yeah, fast forward to the post-war market in the 60s, and everybody was looking to live this fast, flamboyant lifestyle. They wanted the flashy cars, the nice suits, to be on yachts and have houses all over the world.
Is this 2020?
Right. This is the time that the market flourished with high risk and high returns. So it was really good to be in the market at this point. A few weeks after him and Ruth got married, he secured a desk in Ruth's father's accounting firm. With $5,000, he registered his company, Bernard L. Madoff Investment Securities, BLMS, selling over-the-counter stocks.
Cool. I love that.
Yeah. Do you know anything about over-the-counter stocks?
That's what they did in Wolf of Wall Street, right? Or
something like
similar.
That. Yeah.
Over-the-counter stock, it sounds like cheap stocks.
So you're not too far off. See, at the time, most people believed that the stock market meant dealing with the New York Stock Exchange. But over-the-counter stocks consisted of dealers and traders dealing over the phone. So not just in person. This market was made up of companies that were considered low tier. They were either too small, not reputable enough, or even disreputable companies.
Oh, okay.
So thinking that they might be some of the cheapest stocks is actually pretty on point.
So definitely not a smart investment.
Yeah, but I wouldn't say a bad investment either at the time.
Okay.
It was more so just another way of dealing stocks, but a lot of the companies that dealt with those stocks tend to not be good companies. So
okay. Bad marketing.
Exactly. These companies would deal with the trading of what was called pink sheets, which had a reputation for being riskier than those traded amongst the major stock exchanges. This would work by them calling their contact, agreeing on a price for shares, and then at that point, the contact would then mail you a certificate saying this is how many, shares that you bought.
What happens if it gets lost in the mail?
Well, that's the thing. Because of that, it became a lot harder for people to track, which made it a riskier investment. And at the same time, nobody really knew what the price of these shares were because a lot of that dealing was over the phone.
Oh my gosh, I could see how that could go wrong in so many ways.
Correct. Bernie was actually pretty successful at dealing in the wild, wild west market of selling pink sheets. So successful that he began running a small investment advisory business. Now, this was separate from his legitimate business, Bernard L. Madoff, BLMS.
Yeah.
Yeah.
His LLC.
Right, his LLC. So this was a completely separate side of the business, his investment advisory business. This would be very important to the whole scheme of it all, knowing that these two are separate.
Okay.
This seemed more lucrative because as an investment advisor, he would earn fees rather than commission for making investments for people trying to earn them returns.
Okay.
And in the world of stocks and stock buying, the fees could end up totaling out way more to what your commission could end up coming out to at the end of the year. So this is why it was way more lucrative. You want those fees. His father-in-law, Sal, being a successful accountant, had a lot of clients that he worked for that he started referring to Bernie. These referrals were perfect for young Madoff. He ended up having about 20 to 24 people that wanted to invest with him, which is great starting off. Remind you, he only started with $5,000 in the corner desk office. So having 20 to 40 people.
He had a corner desk office? That's usually
Well, not a
good
corner desk office, but a corner desk in the office. He had about 20 to 24 people that were immediately willing to invest with him.
Yeah, that's pretty good. I'd be feeling good about that.
Yeah. And then Saul, thinking that he's being a great father-in-law, wanted to make things so that it was easier for Bernie's job. So he decided that instead of setting up individual accounts with all of these clients, he would just pull all of the money together and give it to Bernie. And then Bernie would then invest that money into stocks.
Oh, so like a mutual fund. I understand that.
Right. It's funny that you say that.
Sorry, am I getting ahead of you?
You're definitely where you're supposed to be. When they saw profits, Sal would allocate them amongst the investors, essentially creating an unregulated mutual fund.
Oh, gosh.
All right. At the time, Bernie was making high-risk trades with high rewards, so it wasn't really an issue. He was determined to be successful, and he was definitely achieving that. Just one problem, though. This was highly illegal.
I was about to say, that sounds illegal. Like, there's no regulation on that.
Exactly. That was the point. There was no regulation on it. Any investment firm that is managing 20 or more accounts must register with the SEC or the Security and Exchange Commission to make sure that they're abiding by policies and guidelines set forth to help protect investors. Then in May of 1926, it all comes down crashing.
Oh.
Yeah. As the stock market crashed, the first stocks to go were actually many of high-risk stocks that Bernie had invested in. Like I said, he was making very high-risk trades, but he was bringing in high rewards. So
high risk, though.
Right. And at the time, people didn't have an issue. But then once this started happening, he had a lot of clients that were looking to get their money back. The investments totaled $30,000. Wow. To remedy this, he went to Sal and borrowed about $30,000 to make all of his accounts whole again.
Right.
So pretty much just
was
like
trying to band-aid it.
Yeah, just buy me out pretty much. He then lies to all of his clients about what he has done. So to his clients, he looked like a genius. He just navigated this stock market crash, didn't lose anybody any money. This is perfect. Wow. If you have your money in the stock market and it crashes, the best thing that you could hope for is that you didn't lose everything.
Right.
These guys weren't losing anything, or so they thought.
Yeah. Oh, he's a tricky one.
Yep. So with that, they continue to invest into Madoff, which would only make sense.
Wait, what are the checks and balances here? Because, like, if I was his boss, I'd be like, well, why are you asking me for money? Like, people are not curious enough.
Exactly. But then again, it may be, people didn't want to know.
True. Right. If he's being successful and the clients are happy, like win-win.
That's kind of what I'm thinking.
Icky.
Yeah.
You're listening to our new podcast, Evil Money. Every Thursday, we break down true crime cases that meet at the intersection of money and morality. If you like what you hear, we'd greatly appreciate if you give us a like and subscribe and leave us a review so our podcast can reach more listeners like you. Thanks for listening. Now back to the episode.
Start of the 1970s, inflation was going crazy, which led to a recession. But Bernie saw this as an opportunity to help his business stand out and make more of a name for himself. Bernie decided that he wanted to move his company to an office building. This was a big step for Bernie. This was when he became what is known as a market maker. A lot of the time, people think that buying stock is simply an A to B transaction, but what actually happens is that it's an A to C transaction. And the best way to break this down is if I'm buying stocks, I wouldn't just contact, the person who owns the stocks because they don't own the stocks. What would actually happen is that there's what's called a middleman or a market maker. And their whole job is to buy stocks and hold them regardless of whatever the market is looking like until somebody's wanted to buy those stocks.
Oh, okay.
Yeah, he's kind of looked at as like a wholesaler.
Okay. Like Costco.
Kind of like Costco. Yeah. He was doing so well that he actually hired in his brother, Peter. With Peter, the business continued running like normal. And then when the introduction of computers arrived, it kind of changed the way that Wall Street worked altogether. The big players on Wall Street no longer wanted to buy 200, 300 shares at a time. They wanted to buy thousands and they wanted to do it on a regular basis because now that efficiency should be there.
Mm-hmm.
It would no longer take a week to buy or sell shares. And with the help of Peter, Bernie got that down to about 3 days. So he was allowing people the opportunity to be able to buy more than regular on a regular basis in a faster process, which kind of helped bolster his business even more.
Oh, for sure. Not only are they buying, thousands, but they're coming to you because you're doing it faster.
Exactly. And he was at the same time still getting referrals from his father-in-law, Sal.
Wow.
So more money was still pouring in.
He's got good connections. They brought a lot of family in. This is when people are like, yeah, I knew somebody at the company and it's like a family referral. I'm like, that's good to know. Like,
exactly.
Good to know people.
So a few years after Sal retired, his father-in-law, two of the accountants that he had brought in prior to his retirement took over the business. Their names was Frank Alvalino and Michael Bienes. They changed the name of the company and they knew that Bernie was managing money for family and friends. So they came up with the idea to create what is known as Bernie's first feeder fund by pulling money from different types of investors, corporations, family offices, and individuals and sending it to Bernie's unofficial investment advisory business.
So he was consistently borrowing money for what they thought was investing in the business, but he was using it to mask losses.
That's exactly what it was. So he was,
Wow.
in a sense, masking any losses that he had at that moment with any loans or investments that were actually coming in.
Yikes.
In exchange for raising the money, they would receive a fee. So they began pulling in a lot of money for Bernie to manage.
Mm-hmm.
Like I said, fees is what makes a lot of their pockets. Again, this was all illegal.
Mm-hmm.
From the moment he worked managing clients for Sal to now, Bernie did not register with the SEC, which states that a business managing more than 20 accounts should do, because it would help the SEC identify accounts that need to be, abiding by regulations.
Like these.
Albalino and BNS were taking money from clients, not telling them what was happening with it or where it was going or even who was managing it. They claimed to have a secret money manager that they couldn't reveal. By the end of the 70s, he was a family man running 2 successful businesses. He and Ruth had 2 kids and moved into a wealthy neighborhood in Roslyn, Long Island. He would commute to Manhattan via seaplane.
What?
Yeah, rather than taking the train or a car like a normal person would.
Wow.
Yeah, but he was known to be extravagant, Like I said in the beginning, he wanted to live this fast, flamboyant lifestyle, showing everybody that he is, a big name.
Mm-hmm.
In the 80s, his legitimate trading company became very successful. He was on the governing board of NASDAQ. At the time, he and Ruth moved into a penthouse in Manhattan.
Wow.
He bought a summer home in Montauk. He had a boat. He was pretty much living a very successful
life.
Yeah, very successful lifestyle.
Wow. Yeah, that is money.
Yeah. In the summer of 87, he moved his company to a more prestigious building, 885 3rd Avenue, which is also known as the Lipstick Building. The building itself resembled a lipstick container, hence the nickname. This move was a sophisticated move on Bernie's behalf to show business partners and clients how successful the company was.
Bernie really stuck it also to his father-in-law.
Yeah, because he thought that he wasn't good enough for Ruth, and then he turns around and, Starts running 2 successful businesses.
Penthouse in Manhattan.
I'm pretty sure his father most likely invested with him as well, or his father-in-law,
That's
you know.
hilarious.
But Bernie wasn't just good at investing. Everyone perceived him as a loving family man and that he was very generous. He would do things like give money to charity. He paid for his employees' airfare for their honeymoon when they got married.
Huh?
Yeah. He was on the board of Yeshiva, which is a traditional Jewish educational institution. He worked with the Special Olympics and even paid for a woman's heart surgery. I tried to look into the woman's heart surgery thing. I couldn't really find anything, so that's more so hearsay. But, like we said, he was living this luscious lifestyle. I'm pretty sure he probably did. A lot of people thought that he was a very generous man.
Definitely, but it's all making me think about William Hale from episode 1 of the Osage
Yeah.
murders, because he was also a very giving and charitable man who paid for surgeries and fed families that couldn't afford to feed themselves. Like now
Now you become
now
skeptical.
hearing it, I'm a little skeptical.
Yeah, no, definitely. But reportedly, he had OCD. He would fix computer monitors in the rows. He made everything in the office black and gray. He liked for things to look pretty pristine. There was even one lady that recalled, him fixing the computer to be in line with the rest of them while people were at their desk.
Oh, wow.
Yeah. He was pretty controlling. His employees recall moments of hearing him yell at his brother and saw him more so as like a bully. He was kind of
Aw.
one of those guys that when you were on his good side, that was good. But when you were on his bad side, it was really bad. Yeah, and because his brother worked with him, he kind of used that as an opportunity to bully him. They tell stories of how he would be sweet and caring at times, and then in a flip of a switch would become harsh and brutal. October 19th, 1987, the morning started off in a frizzy with the stock market crashed again. As the Dow plunged, Bernie's offices continued to buy. Since every firm on Wall Street was trying to dump stock, as a market maker, they had the responsibility of maintaining an orderly market. This meant that they would be willing to be the buyer and seller of last resort. But Bernie remained adamant that they would continue to answer phones and pretty much serve clients.
Mhm.
So as the stock markets, crashing, that's the only way to describe it, he and his office were kind of tasked with buying stock still. So everybody's offloading everything and they're there to be a wholesaler. Following the crash, because of all the work that they kept doing while all of this was going on, he received recognition from the SEC and the New York Stock Exchange. He ended up testifying in congressional hearings and helped rewrite the rule book on how to keep the market functioning through a crisis.
Wow.
This boosted his image and people began to look at him as an honest, prestigious man. He was elected to 3 terms as the chairman on the board of NASDAQ.
Wow.
Yeah, so good thing they did keep doing that, because if they did stop buying, they would have been like every other company out there.
Mm-hmm. I'm starting to question everybody that I idolize.
Yeah, well, I mean, like, you see, as time keeps progressing, like, yes, he's doing a lot of good, but at the same time,
it's a slippery slope.
yeah, it's a very slippery slope. Like, he's done a lot of good things, and that's nice, but we'll see at the end. By the 90s, he was a trusted Wall Street statesman. This was the age of the internet, and like the introduction of computers, it made it even easier for people to get involved in the stock market. And Madoff's success saw between 5 to 7% of the total volume of the New York Stock Exchange.
Oh, wow.
Yeah, which is a lot for a small company.
Yeah.
But remember, he still has his under-the-table investment advisory business. And initially, the returns for investors were 11%, but he began reporting returns as high as 15 to 19%,
Ooh.
which is really unheard of, because even nowadays, like, the average is like
Yeah.
9%,
Mhm.
and it was the same back then.
He made himself look too good that I'm sure it drew suspicion.
Oh, you would have thought. But what he kept doing was always showing how he was consistently profitable. Alvalino and Bienes continued funneling money into Bernie's hands. These feeder accounts were very under the radar and quiet, and they never put anything in writing until a subcontractor of theirs, who were pulling investments and bringing in new clients, put something in writing. After receiving a brochure from the company, the SEC realized that there were some serious problems.
A contractor. Oh no,
All right.
they got
Oh,
fired.
immediately. For one, Madoff's company boasted about having 100% risk-free trading,
Oh no.
which is never a thing.
That's impossible.
Yeah. They began an investigation which led them to Frank Avellino and Michael Bianes. Frank and Mike showed up to the SEC with a lawyer voluntarily. The SEC asked them how much did they raise for investors, expecting to hear them say between 10 to 15 million. But they reply, I'll let you take a guess.
50.
$444 million.
I was going to say 100, but I was like, I think that's too high. That's crazy. Where did that money come from?
Random investors.
Wow.
Remember, they took over Sal's, accounting firm. So there's investors there. And pretty much any and everywhere that they can get money
That's
from.
people's money.
Remember, they're supposed to be in cahoots with a small investor company. And that's a lot of money for a small company, especially in the 90s. The problem, though, is that the SEC believed it was just Frank and Mike that were handling this scheme. But it was actually Bernie. And Frank and Mike, told the SEC that it was actually Bernie doing all the trading. So the SEC started looking into Bernie. Rightfully so. They started requesting documents from Bernie, and this terrified him because he knew that he was running a fraud scheme. He was taking all of these people's money and creating fake trades to show profits. He was essentially running what is known as a Ponzi scheme.
So basically, it's when you take somebody else's money and lie about it.
Essentially, yes. So what Bernie was doing was taking money, telling people, hey, I'm going to invest your money, but actually was never doing any trades at all with that money.
So he was just pocketing it. It wasn't that he was even a bad investor. He just wasn't even investing it. It was his personal piggy bank.
Yep. And
Stop.
he was showing fake profits for it. Bernie didn't just give up and tell the SEC, yes, I'm running a Ponzi scheme, because that would be the right thing to do. Instead, he turned to Frank DePascali, which was his right-hand man, and asked him to create fake trading documents that he could give to the SEC. Frank, being the man that he is, did it. He handled...
Dang.
Yeah. Frank handled all of the feeder funds and the accounts where all the money was deposited for investing. Frank began creating legitimate account records, trade logs, and account statements. And the sad part is that the SEC actually believed the documents were real. And in 1992, they closed the case against Bernie, missing one important part of information: that he still wasn't registered as an investment advisor.
Stop. What a miss.
Huge miss.
How do you not even check that?
Are you joining us from our other platform, Salary Transparent Street? Well, considering we don't have ads and are self-funded, we wanted to take a second to shout out our own page's resources. If you think you're underpaid, we have free guides, tons of articles, a salary database, and a transparent job board to help you determine your true market rate. Check it out if you need help earning and learning more. Now back to the episode. The only decision that came from the investigation was to have Avellino and BNS close their business because they were running an unregistered investment firm. With that closing, they were required to take all of the money out of the accounts and return it to investors. But remember, they brought in roughly $444 million, so Bernie didn't have all of that money on hand. So with that, Bernie asked three of his longest investors, Jeffrey Pickauer, Carl Shapiro, and Norman Levy, to help him out with that money. This money helped cover all of the money that he owed, which was, $444 million plus.
They didn't have questions for him.
But supposedly none of the investors wanted their money back. Bernie had been reporting profits and maintaining profits even in the worst of times. The investors liked working with Bernie because he never saw a loss. A lot of the investors began working directly with Bernie after Avellino and BNS office was forced to close. A lot of those people were elderly and or widows in Florida. He was convincing them to continue to invest with him by promising steady returns averaging 9% a year. For them, it was the right decision. There were news articles and reports claiming he was one of the movers and shakers in the market. They also said that he was leading the market in electronic trading, and the fact that the SEC closed the case against him, so there was no findings.
Wow.
So to all of his investors, it was the right move to make. All the press coverage allowed Bernie's name to become well known in the wealthy community. His name became known amongst wealthy individuals. He began working with everyone from philanthropists like Elie Wiesel, a Holocaust survivor, to the Katz family and Wilpon family who owned the New York Mets. At this point, he had about 5,000 clients for his investment advisory business and felt the need to scale up. But he still wanted to keep his business separate. So, on a separate floor of the Lipstick Building, floor 17, he leased a few offices there and put Frank DePascali in charge of them. These offices were set up differently than the pristine, organized ones that he ran for his legitimate business. They were dark and chaotic. It was said to look like the 1980s with boxes piled up in dot matrix printers. In order to keep up the fraud, Bernie's team would create fake trades to make it look like they were buying and selling shares for their customers.
So Bernie's team knew about this, like they were actively in on it.
So actually, this is a little bit of ahead, but that was one of the things that were brought up in the case against other people in the Bernie Madoff's case.
Okay. We'll get to it.
Because they were tasked with creating fake documents and trades and stuff, they had to somewhat know what was going on.
Or you knew something was up. You
Yeah.
had to know that there was something
There's
up.
no way you were participating and didn't know.
Something.
They would then have other members of the team create statements to show that they were profiting and mail them out to clients. Bernie's business was a family-oriented type of business. He hired Peter, his brother, to run compliance, and he even brought on his sons to run the trading floor. Mark and Andy wanted to understand the whole business, but there was one line that was drawn by Bernie. They weren't allowed on the 17th floor.
The shady business.
Right. By 1994, Bernie set his sights on Palm Beach. Him and Ruth had bought a house and joined the Palm Beach Country Club. The club stood out amongst the others in Palm Beach because it was a country club open to Jewish and non-Jewish people. So a lot of Jewish families joined the country club. At that time, there was a lot of Jewish discrimination. So a lot of clubs in Palm Beach actually didn't allow Jewish people.
Wow.
Yeah,
I
and
didn't
this
know
was
that.
one of like the first to do it.
Okay. Wow.
Yeah. Also, due to the location of being in Palm Beach, the country club participated in many fundraisers, and being charitable was one of the qualifications to being accepted, in addition to the $300,000 membership fee. Many people speculated that he chose this country club because of the status and exclusiveness that comes with being a member. This is the same way he treated his investment advisory business, and Bernie was known for turning away investors and not accepting new clients to the point to where it felt like he was doing you a favor by investing your money. As hedge fund management became more popular, Bernie took advantage of this. He began working with Fairfield Greenwich Group, which was a hedge fund managing team. Bernie explained his split strike conversion strategy, which is more commonly known on Wall Street as a bull spread. This is when you ride the bull market up and you draw a line at your losses so you don't lose too much. What they really liked, though, was the fee structure, which is 2 and 20. Simply, Fairfield Greenwich would receive 2% of all of the assets invested off the top, which would be calculated as their yearly fee to manage the accounts. But then they would also receive 20% of the profits you made. Normally, they would have to split these fees with Bernie, but Bernie insisted that they keep the entire fee and he would only require them to pay his commission for the trades that he made. This was an attractive deal for the hedge fund managers. And when they would try to ask questions, Bernie relied on his old strategy of trying to push them out and saying that he's not going to invest the money if you don't want them to. Although he was very charismatic, anytime people posed questions to him, his go-to was to just shut you out. If you don't want to be here, then leave type of person.
Yeah, he sounds like a terrible partner. Like when you call out any type of like bad behavior, they're like, oh, well, then I won't even do that ever again.
Yeah,
Like,
that's
he sounds
exactly
like a
the type of person.
child.
Yeah. Hedge funds became the new feeder funds for Bernie. Now, do you remember the big investors that he had? I mentioned the big four that bailed
Yes.
him out. Yeah. So Norman Levy, Carl Shapiro, Jeffrey Pickhour, and the new one, Stanley Chase, were Bernie's big four investors. These clients were promised a bigger return from Bernie, and when Bernie was asked if he thinks that any of his clients had any idea of what he was doing, he had one response: Pickhour. So when you asked if any of the people that invested in him, that bailed him out, of that $444 million bailout. If any of them knew, he assumed that one of them, Pickhauer, knew exactly what was going on.
Why?
I guess it's just the feeling that he had, but also
Okay.
because of what I'm about to tell you next. Pickhauer was one of Bernie's longtime clients for over 30 years. He was a lawyer and accountant that got started selling tax shelters. Tax shelters can be anything from employer-sponsored 401ks to overseas accounts. It's a way for an individual or corporation to reduce their tax liability. Pickhauer was a heavy investor into Bernie's accounts. He invested north of $600 million. But then between 1998 and 2003, he began to withdraw money. He was withdrawing large sums of money too, hundreds of millions at a time, even up to $1 billion in 1 year. In total, Pickhauer withdrew $7 billion from Bernie's investment advisory business.
Wait, I'm confused. How is he withdrawing money though?
Uh,
I thought he was giving Bernie money.
Correct. So he was investing his money into Bernie, but with that, the way that the accounts would work is you invest, but then based on profits, you could withdraw your profits.
So
And
he was taking out more than he was putting in?
exactly, he ended up pulling out
Oh.
almost a total of $7 billion.
But you know what? That might be genius because what's Bernie going to do? You know, if he tries to complain or get any type of recourse, they're going to find out his scheme. So, in a way, it's kind of smart.
Yeah, well, because Bernie relied on him. That was the thing.
Hmm.
And he kind of knew that he had him in his chokehold to where if Pickhauer did know what was going on, he definitely saw this as an opportunity, as kind of like a cash grab.
Yeah.
I'm going to withdraw whatever I want and whenever I want to. And if you have anything to say about it, cool, we'll just tell the SEC.
Right. Oh, wow. Things weren't going as smoothly for Bernie as
Yeah,
he hoped, I'm
definitely. I mean, like
sure.
he definitely tried to set himself up as like the top bull in the ring, and that move from Pickhauer kind of showed that he wasn't.
Yeah. He John Cena'd him.
But Bernie still relied on him because he would still deposit money, especially in crucial moments, bailing Bernie out every time, which allowed him to keep his scheme running.
Mm.
Pickhauer began using the business for his own gains, though. He would call the office and request fictitious statements claiming losses so that he wouldn't have to pay taxes on the money that he had been taking out. In the early 2000s, when the dot-com bubble popped, the stock market began cratering again. Obviously, this is a common theme. Like this stock market was rough for a while.
That does make me feel a little bit better, though, that stock market crashes happened a lot and they were frequent, at least before I was born. So,
Yeah, crashes, dips, they were a regular occurrence almost.
yeah, makes me feel like, growing up, stock market crashes felt like the end of the world. But now they've happened a few times in my lifetime that we're good over here. We're weathering the
Yeah,
storm.
it ain't our first time.
Ain't my first rodeo.
Erin Arvalon was a reporter that covered businesses. She began working at Bernie Magazine, and she started her focus on hedge funds. One day, a source of hers informed her of Bernie's hedge fund.
Yeah, let me guess. Does she take him down?
Actually, no.
Oh,
But
no.
yeah, they were bolstering about how he never loses money. That's his winning thing. He never loses money. That interested her because never in the history of the stock market has there ever been a hedge fund that never lost money. As part of her research, she found an investment pitch from Fairfield Greenwich that was meant for potential clients. With that, she began asking around the trading floor if other investors had done any trading with Bernie. To her surprise, nobody had done any trading with him. She then began to ask private banks if they had, people investing in the hedge fund. She started to notice that some of the clients of these banks would tell her that they could invest with Bernie's hedge fund, but they couldn't tell the people who the money manager was. She immediately saw this as a red flag. Before, Bernie's investment advisory company stayed out of the public's eye. But after the Barron magazine article, that changed. The article itself did not accuse Bernie of doing anything illegal, but it did raise questions amongst his investors. Jeffrey Tucker from Fairfield Greenwich started to become worried and went to meet with Bernie. While there, Bernie, with Frank at his side, assured Jeffrey that there was nothing to worry about and even offered him the trade ledger with supposed trades made. Jeffrey, being a lawyer, needed a little bit more convincing than that. In his eyes, somebody could print off those documents and pass them as real. So, what does Bernie do? He then asked Frank to pull up their account with DTC, which is the Depository Trust Company. This is pretty much a bank account for every broker on Wall Street. So he should be able to tell if, the money's there.
Mm-hmm.
He then tells him he can check his portfolio anytime with this. After showing Jeffrey a few accounts that showed the shares that were supposed to be there, Jeffrey left feeling reassured. What actually happened was that Frank hijacked the legitimate clearinghouse feed from the firm upstairs and had woven fake trades among them to reflect the numbers that they were showing Jeffrey.
I mean, when there's millions of dollars at stake, I guess you do what you have to do.
Yeah, if you don't want to be caught, make sure that you know how to lie.
Crazy. Wow.
In order to pull off the scheme for so long, Bernie had to figure out a way to constantly create fake documents to meet the investors' needs. Account statements, trade confirmations, and reports all had to be created using the computer. And there was no software available that would create these documents for you.
No AI.
Exactly. So at this point, he hires a George Perez and Jerry O'Hare, who were computer programmers and very crucial to helping him continue this fraud for so long.
See, how did they not know? Your job is literally to generate like fake statements.
They had to have known.
Come on.
There's no way
There's
they
no
didn't.
way.
After a while, they both began to become nervous about their work.
Yeah.
They knew that they were creating fake documents and they knew that they were frauding people. So they went to confront Frank about it. It was pretty much blackmail at that point. Since their work was so important to the scheme, they requested pay bumps. But in order to make it not look suspicious, they requested that their raises be in diamonds.
They were like, oh, we'll keep doing it. Just give us more money.
They then confronted Bernie about it, but he was ready to play hardball. They told him that they aren't comfortable doing the work and even told him that he should shut down the investment advisory business.
True.
But Bernie didn't budge and eventually kicked them out of the office. Through negotiations through Frank, Bernie gave them approximately $60,000 apiece for them to keep quiet. Some people may think that the people who gave money to Bernie were greedy, but for many that wasn't the case. Gordon Bennett was an average family man that worked hard to earn his money like many did. With the little nest egg he created, he started looking at investing as a way to provide. Before investing with Bernie, he attempted to do his due diligence by hiring a security firm that investigates money managers. Surprisingly, they reported back with no problems found. He even read articles and stories about Bernie since he was so mysterious. From Forbes to The Economist, article after article touted how he was such a successful man. In comes Frank Casey. Frank Casey was brought in by Rampart Investment Company out of Boston for internal sales. He was tasked with obtaining more clients and innovating new products for them. With that, he headed to New York and scheduled a meeting with, I'm going to botch this, but Thierry Magon de la Villachet.
It's a French name.
Yeah, or something like that. And he was an investor as well as an investor conduit for some of the richest people in Europe. Frank saw this meeting as an opportunity to get into the wealth management banks of Europe. Thierry showed him transcripts that he received every day of confirmations of trades. At the top of the page would be where a name would be was a redacted line of black Sharpie. Thierry relayed to him that he had a secret hedge fund manager, but he couldn't tell him who it was because if the manager found out that he gave up his name, he would drop him as a client. But his manager was producing 1% per month on a regular basis. Frank, coming from finance, knew that this was impossible. The work he was doing was an option work, which Frank used to do. The only difference was that month to month, he was operating at a loss, which brought questions to Frank's mind. After discussing how much Thierry had with his secret manager, Frank estimated that he had been managing more than $3 billion just based on what Thierry had with him. Speaking with Thierry, he found out that Thierry had all of his money with him. Thierry's family had all of his money with him. Thierry's family's family had all of their money with him. So like these connections ran pretty deep.
Layers upon layers.
Frank ended up getting a glance at one of the documents on Thierry's desk and noticed the statement on the top of the name read Bernie Madoff, BLMS. After the meeting with Thierry, Frank returned to his bosses at Rampart and told them what he knew. The bosses understood that if he worked with Thierry, it would bring in a lot of money, but they would be competing with Bernie. So they tasked Frank with reverse engineering what Bernie had done and figuring out how he was producing those numbers.
Right. I would have been trying to do that years
From the
ago.
beginning, you
Yeah.
hear this guy, bringing in these new techniques or strategies and constantly performing, figure out what he's doing.
What the heck is he doing?
Frank then gave the one-page tear sheet of Bernie's feeder fund to Harry Markopolos, whose name is actually spelled like Markopolos. Harry was a mathematician with a background in calculus and statistics, and within a few minutes of looking at the document, he told Frank that the returns were BS, honestly.
Mm-hmm.
Yeah. He tells Frank that it's a fraud and possibly a Ponzi scheme. Madoff was...
The first person to see this. This guy's a hero.
Yeah. But at the time, with his name being as big as it was, Frank was kind of like, hey, I wouldn't say that too loud if I was you,
Yeah, he's like the Diddy.
Right, exactly,
The Diddy of Wall Street.
Madoff Securities was running 7 to 10% of the total volume of the U.S. stock market.
Oh my
so
gosh.
A lot. Even though Harry told his bosses that those returns were not possible, he was still tasked with developing a Madoff-like product. After spending hours modeling the returns, he saw it didn't replicate anything to do with the Wall Street market or the U.S. stock market. In actuality, it only reflected about 6% of the market at any time. He saw that his returns were literally off the charts and understood that Madoff was not playing fair. And Harry didn't like this and wanted him gone. By all means, if you see somebody in your market isn't playing fair,
you're going to take them down.
Yeah,
Or at least you'll try.
I want my piece of the pie, but I can't because you're taking all of it. Yeah, I'm going to try to see if I can get you out of here, bro.
Target on your back.
Immediately. March 1st, 2000, Harry decided to do something about this and submitted documents to the SEC. They read, and this is quote, "In 25 minutes or less, I will prove one of 3 scenarios regarding Madoff's hedge fund operation. 1, they are incredibly talented and or lucky, and I'm an idiot for wasting your time. 2, the returns are real, but they're coming up from some process other than the one that is being advertised, in which case an investigation is in order. Or 3, the entire fund is no more than a Ponzi scheme." Harry faced enormous challenges because the SEC relied on Bernie as a source of Wall Street wisdom. He helped launch NASDAQ, he changed the industry, and he also spent time on panels for the SEC and other government agencies that assisted with regulating businesses.
Yeah, they're not going to like hearing that their star is a fraud.
They're pretty boy. Harry tried multiple times to try to get the SEC to do the right thing on Bernie Madoff, but he was rejected several times. By December of 2000, Bernie's scheme had raked in over $30 billion. Harry, still not giving up, decided to go to all major papers with his story, but none of them were willing to go against Bernie unless with concrete evidence or a smoking gun. Harry recommended to Frank that they would need an investigative reporter in finance. So, while Frank was on his way to a conference that he was speaking at in Barcelona, he ended up in a cab with a stranger. This stranger introduced himself as Michael O'Crack, an investigative reporter in financial fraud.
How lucky is that?
Coincidences, right?
Wow.
Frank then began to tell him about Bernie Madoff. He teased him as a secret hedge fund manager that would blow any of his managers out of the window, with asset size and risk adjustment rate of return. O'Crack wanted to write an article about it, so he spoke with many people and began to question how Madoff was making those numbers. The article, "Madoff Tops the Charts, Traders Ask How," made its way to the SEC in Washington, D.C. Upon reading, a senior enforcement officer decided that some questions needed answers. So first time that the SEC is finally like, okay, cool. We see that there might be a problem. We might need to go speak with somebody about something. It was surprising to her that Bernie would be managing such a large sum of money and not have registered his investment advisory business with federal regulators.
Right.
She had known Bernie personally, so she decided to give him a call. She had told him that they would be doing an exam and had questions about his hedge fund. Bernie replied that he didn't have a hedge fund.
What?
She replied that she didn't think so and just wanted to make sure, and that was the call.
That's weird. I'm suspicious.
After 9/11, a lot of the resources that were used to help regulate business practices had their focus changed to war on terror.
Right.
For Madoff, that was great. By December of 2001, his estimated assets were calculated to over $36 billion. At the time, Bernie's legitimate trading business wasn't doing so hot. The market was becoming more volatile, so companies weren't making as much as far as trades. Bernie also had an overhead problem. The business was not bringing in as much or more as it was expensing. He only had between 35 to 50 traders that were generating a profit, but more than 150 employees. He was also known for hiring friends, family, employee friends, and anyone that they recommended. To make sure his reputation didn't take a hit, he and Frank DePascali decided to funnel money from the investment advisory business to the legitimate trading business in the sum of $800 million.
Oh my gosh.
So because he didn't want his legitimate business to look like it was doing bad because it's his legitimate business, he decided to take money from his illegitimate business.
And I'm thinking that's how he gets caught. Is it?
No,
Oh,
if
dang
only,
it.
right? If only. But the way that they did this was by wiring money to London, and then they would wire it back to the 19th floor, disguising it as investments in the form of U.S. Treasury bills.
Damn.
Yeah. Bernie also did not spare any expenses when it came to his personal life. He had a yacht, a house in France, and even a private jet that matched the colors and themes of the 19th floor office.
Oh my gosh.
Yeah. And
So he didn't slow down after the penthouse in Manhattan.
No, definitely. And the thing is that all of these expenses were coming out of the business still.
No.
So
That's
him
bad.
still being a generous man, he didn't slow down on gifts. He didn't slow down on giving money out. He actually lended money to his family, gave his sons loans without expectations of those being paid back, and also bought gifts for everyone, all on the business dollar. Around this time, Harry's investigation made it to print, but he did not receive the uproar he was hoping for. Everyone just kind of let it go. His bosses were also still asking him to duplicate Bernie's technique. With this, he was semi-successful. The only issue was that there was a possibility that you could lose up to 50% in a month. High risk, high rewards. Teray believed that there was still a market for it though. So he began pushing it as an alternative to Madoff's clients. This led to Harry traveling with Teray to meetings with some big money in Europe. The problem is that Madoff never loses. Most of the clients saw Madoff as a risk-free investment opportunity, and he would tell them that he only works with them. He's only taking their money. That's it. So for a lot of these big names, and when I say big money, I mean big money. That's exactly what they want to hear. Risk-free trading, and you only work with me.
It's a dream.
It's a dream. With this, Harry realized that Madoff had billions and billions of dollars in Europe. Like many of Madoff's investors, Teray had all of his money, most of his family money, and most of the people he was close to's money in Bernie's account. Peter, Bernie's brother, ran compliance for the company like stated before. His job was just to make sure that they abided by regulations and SEC guidelines. He was supposed to be the point of contact between the SEC and Madoff's office whenever they received a complaint.
What a crazy psychology move there, like a power move that you would put your brother in charge of, the thing that compliance,
Compliance, yeah.
it makes him complicit in if he knows what they're doing wrong.
And if
So
he doesn't know what they're doing wrong, still that's your job to know everything that they're doing pretty much.
right, and I can imagine that if he knew that they were doing something wrong, but he sees, the good, quote unquote, good that his brother's doing and the lifestyle that they can now afford, I could see how he would feel guilty to cause all that to come crashing down. That's just a crazy power move.
Yeah. In addition to Harry Markopolos' complaints, there were others about Bernie Madoff at the time. They actually have received several other complaints from other people throughout the years.
Where there's smoke, there's fire.
Correct. The SEC finally decided to conduct an examination and assigned 2 junior examiners to go to Bernie's office and conduct the exam. They were immediately ushered into a conference room and then told that their personal contact for the exam was Madoff himself.
Oh.
Yeah, and which was odd. That's why you have a compliance officer. He would make sure that they were watched at all times, and if copies needed to be made or things like that, he would have the employees do it for them and then make note of whatever it was.
Mm.
What were they copying? Because the whole time they were there, he actually didn't know why they were there, what they were searching for.
Oh, he was sweating.
Yeah. But he was charismatic the entire time and would tell them stories during chats. He even told them that he was in line to become the next head of the SEC, which
He probably would have been.
there's actually an email chain between the examiners, the junior examiners, and their boss, where he kind of jokes like, yeah, Bernie's in line. So, I mean, like, it kind of makes it to where it's a big deal. Imagine you're this fresh out of college kid, assigned to your first job, and now you're meeting Bernie Madoff in his heydays,
Yeah. No, definitely.
who may become your next boss.
Hmm.
And you're supposed to conduct an examination about his business.
Yeah, and you could potentially take him down. Like, no, there's a lot going against you there.
Yeah. Still, they did not tell him exactly why they were there. But Bernie was very controlling. So what he decided to do was, during one of their lunch breaks, he actually rifled through one of their briefcases and found the articles that was written about him and his business.
Wow.
Yeah. The ones that were previously written, not accusing him, but definitely posing questions.
Hmm.
He assumed that they were investigating the Ponzi scheme and he confronted them. Through talking, he found out that they were looking for evidence of his hedge funds, which Bernie ended up telling them that he doesn't have any hedge funds and he only deals with trading for hedge funds. This forced them to close their examination with the conclusion that he wasn't doing anything wrong.
You're listening to our new podcast, Evil Money. Every Thursday, we break down true crime cases that meet at the intersection of money and morality. If you like what you hear, we'd greatly appreciate if you give us a like and subscribe and leave us a review so our podcast can reach more listeners like you. Thanks for listening. Now back to the episode.
In the late summer of 2005, former CEO Samuel Israel had pleaded guilty to conspiracy and fraud for his participation in a Ponzi scheme. This had shaken up Wall Street with this exposure. This was felt at Madoff's investment advisory business as well. Money wasn't flowing in as fast, and it was flowing out a lot faster. He was down to his last $13 million in his account to support his Ponzi scheme, and already there was more requests showing up for more than $100 million. Again, he reaches out to Jerry Pickhauer, same guy who bailed him out last time.
Mm-hmm.
And sure enough, he comes to his rescue with $125 million
Wow.
in the nick of time. This made him become very dependent on Pickhauer to pull him out of these, crucial crunches. But there was also Sonia Cohn. She was kind of known as the female version of Bernie. She not only brought in a lot of money for him, but people also said that they looked pretty similar, like they could be siblings or something.
Oh, wow.
Yeah, which is crazy.
And I've seen pictures of him, so I don't know if I'd take that as a compliment as a woman.
I gotta show you the picture. You'll be like, ew.
Oh, no.
Yeah. She had a number of feeder funds all across Europe, and the most important one was the Herald Fund. The money that she brought in with just that one fund alone helped get Bernie back onto solid ground. Their partnership helped rake in millions and even billions for Bernie. And she got a nice little slice off the top too.
Of course.
She then created an entity called Bank Medici. This entity then finds itself with a minority stake in Bank Austria. Then Bank Austria ends up getting taken over by a bigger bank, Unicredit. Her just happened to, by happenstance, having this minority stake help elevate her to becoming a part of a pedigree banking system in Europe, which allowed Bernie to reach his hands into pockets all over the world.
Wow.
Yeah. For 5 years, Harry worked to get the SEC to look into Madoff. He created this document with over 30 red flags that he saw in Bernie's company, hoping that at this point that would be enough to get them, to actually look into him.
Okay.
And not even just wave tops either, like actually look into him.
Yeah, he didn't let up.
Oh, definitely not. In short, he listed out the trading strategies that Bernie used and that they simply could not provide the returns that he was saying. The type of options Bernie claimed he was trading in only traded in one place, and on an average month, there was only 1.5 billion of those options traded. In order for Bernie to be pulling in the numbers that he says he is, he would have needed several times that many in order to make that happen. One of the obvious red flags was the lack of a counterparty. For every trade, there has to be a partner or counterparty with that trade, and no one was able to find that counterparty for Madoff's trades. At that point, with the evidence from Harry Markopolos, the SEC decided that they needed to do a full investigation. Unlike the 2005 investigation, the SEC will look into all of his clients and the clients that he supposedly traded with. They then began talking with Fairfield Greenwich, which angered Bernie. Bernie, being the man that he is, immediately called up the compliance officer at Fairfield Greenwich and told him what to say to the SEC. The SEC had suspicions that the compliance officer was being coached based on his responses, but that still didn't change their investigation.
Good.
Yeah. So Bernie decided that he wanted to talk with the SEC alone. He, by himself, marched up there, walked into the office by himself, no lawyer, and he told them to ask him anything, and they did. They asked him where he traded his options and that they wanted to check his DTC accounts. That's the banking account that all the brokers have.
Mm-hmm.
He provided them with his account number, even though he knew that if they checked it, they wouldn't see the transactions and the scheme would be over. But the SEC dropped the ball again. They never followed up. It might have just missed it, but the investigation was closed.
Oh
The
my
only-
God.
The only conclusion that they came to was that he must have given them the wrong information about the investment advisory business.
Bro.
Yeah.
I want to smack these people with a book.
Unfortunately.
How are you missing this?
Yeah. In the summer of 2006, they made him register his
choose violence. I'm sorry.
No, you're
what the hell?
Right, so close.
Oh
so
my
close.
gosh.
Honestly, if they would have just looked at the accounts, they would have seen. Because he gave them the right account number and everything.
When you were saying that he literally just walked up there, I'm thinking to myself, yeah, that was actually really smart of him, because I bet he was betting that they weren't even going to check, that him just showing up would show that he was so confident,
Yeah, so confident.
that they wouldn't even check. And he was right. That's actually insane and so bad, terrible for the SEC.
Yeah, unfortunately. And the thing is that the only thing that they came back with was that he needed to register his investment advisory business.
He just got a little warning. He didn't even get a fine.
Correct. So with Bernie being the man that he is, he registered it and then used that as a way to market to new investors.
Right. He's like, hey, I'm actually SEC approved, baby.
Yeah. By 2007, his scheme reached over $69 billion. And it seemed as though the business began to balloon after the SEC investigation.
Mm-hmm.
He was regularly flying on his private jet to his townhouse in the south of France. He also made sure that everybody on the 17th floor shared in the wealth. He doubled Frank's salary from $2 million to $4 million.
What a raise.
Right. Hell of a raise. But all of this didn't last. In 2008, suddenly the global economy was on the brink of breaking. Then, boom, it explodes. Some of the largest investment banks needed to be bailed out, forcing a lot of people to pull their money out of the market. Bernie's office became a central point for everyone pulling out all of their cash. They started receiving withdrawal notices from all over the world because of their reach.
Mm-hmm.
Bernie became frantic and started calling up all of his top investors, trying to convince them to stop taking their money out and continue to put their money in.
Right. Just stop panicking.
Yeah,
It's fine.
Stop.
You just need to put more money in.
Stop. Get yourself together. By December, Bernie had withdrawal requests totaling over $1.5 billion, with only roughly $300 million in his account. At this point, he knew he was screwed.
Mm-hmm.
He sat down with Frank and began discussing what they could do. Frank assumed Bernie had some assets in an offshore account that he would be able to use to cover it, but that wasn't the case. Supposedly, this is when Frank realized that it was a fraud. Supposedly.
I think it's when he realized shit had hit the fan.
Right. Bernie made the decision that with the last of those funds, he would have Frank write checks. These checks were to be distributed amongst some of the long-term investors, employees, and extended family members who would be losing everything. As this was happening, Bernie explained the checks to his son as early bonus checks, which they thought were odd. With the state of the market at the time, they thought that it would be better to keep the cash on hand until the market changed, until it went back up. They went to him with these concerns and were met with nothing but deflection after deflection until, at one point in time, all three of them stood up and left the office. They then headed to the penthouse apartment that he had and met up with Ruth, their mother, his wife. That's when Bernie finally decided to come clean to his family. He explained how big the scheme was and that the checks were his attempt to give away the little money that he had left.
Oh my
The boys
gosh.
were devastated, and Ruth, not really knowing much, asked, "What's a Ponzi scheme?" So that's that. I think that they more so
Oh,
just included that to show like just how not involved she was with it. He was really adamant about his wife had no clue. And that's the one thing that he always said. She didn't have a clue. She wasn't involved. So
yeah. I believe him. Like,
mm,
sounds like she was really reaping the benefits and pretty clueless.
yeah. The boys decided to leave, and in the lobby, they decided that they needed to consult a lawyer to discuss their options.
Yeah, you think?
Yeah, and Mark's father-in-law just so happened to be a lawyer in Manhattan, a pretty
They
good
know
lawyer.
such good
Right,
people.
just tied around everywhere. So after meeting at his apartment, they tell him what their father had told them, and he immediately tells them that they need to report him. The fact that he was attempting to distribute funds from his gains obtained through fraudulent means meant that the fraud was still continuing and that they
Mm,
would become considered accessories to the crime. That next morning, the FBI showed up to Bernie's penthouse.
all came crashing down.
Finally, they asked him for an explanation and he comes clean. He tells them that it's a Ponzi scheme. So they took him in. The news of his arrest broke the next day. This is when the real investigation began. The FBI started talking with the employees on the 19th floor, and through this, they discovered the 17th floor and really began the investigation. With the help of Frank DePascali, the FBI was able to figure out how the scheme worked. It took days, if not weeks, for investigators to start piecing together all of the investors. There was big names like Steven Spielberg, all the way down to teachers, retired dentists, individuals, regular people. A lot of the people were family and had family that invested into Madoff. And in an instant, many people lost everything. These stories range from families who looked at their investments as a means to take care of their kids to those who looked at it as an opportunity to retire comfortably.
Mm.
11 days after Bernie turned himself in, Teray committed suicide in his office in Manhattan.
Oh,
He was known as a man of honor and pride, and after Bernie's arrest, he lost everything. I mean, he said that he had everything with him. His family had everything with him.
that's honestly so sad.
Yeah. Um, Talking about the case, Teray had actually slit his wrist in his Manhattan office with his arms positioned over the trash can so that he didn't make a mess for the cleaning staff.
That's really sad.
Bernie decided to plead guilty because he had nothing to gain from going to trial. He also did not want to continue to put his family through this long, lengthy legal process. He was brought up on charges of fraud and money laundering. He had been out on bail for a few weeks, so his lawyers was hoping to get a trial continuation, but the judge said no, meaning Bernie went to jail that very day.
Mm.
Um, they were hoping to negotiate with Bernie for a list of co-conspirators, but Bernie was adamant that he was the only one involved. But that wasn't good enough for the FBI. They knew that the employees on the 17th floor had to have known something. If they didn't know that it was a Ponzi scheme, they at least knew that they were making fake trades.
Yeah, they had to have known
Mm,
something.
exactly. Something. At least something.
Something.
Other entities that played a bigger role began to face more scrutiny. The SEC, who were the ones who gave Bernie the thumbs up and helped legitimize his business, was under a lot of scrutiny. JP Morgan, the bank that held Madoff's account, was also not free of blame either.
Hmm.
Because he had between $3 to $6 billion in his account, it's the bank's obligation under the Bank Secrecy Act to monitor the account because it wasn't a regular banking relationship. Moving more than $10,000 in and out of your bank account without the bank seeing the logic for that transaction generates a suspicious activity report. This report would then be shared with the FBI, and then they would begin to look into it.
They were doing a lot more than 10K.
That's why JP Morgan was under so much scrutiny, because he was doing way more than that $10,000.
Hmm.
And with that, all they had to do was just generate the report that they're supposed to
Hmm.
if they had been monitoring the account, and the FBI would have immediately started looking into it.
They were
But
asleep at the
because,
wheel.
yeah, they slept at the wheel, the SEC slept at the wheel. For their role in the Madoff's case, JP Morgan was forced to pay out $2 billion, but no criminal charges were filed. In the end, the total was $64 billion that people thought they had with Madoff.
Wow.
But these were the false profits being generated. The actual total that people actually gave Bernie was around $19 billion.
Oh my gosh.
Yeah, 19 billion real dollars.
I can't even wrap my mind around how much money that is.
Right. But the story for the victims weren't over just yet. The courts decided that Bernie was covered under SIPC. SIPC, which is the Securities Investors Protection Corporation, was established in 1970 by Congress, and its purpose is to manage an insurance fund that would provide up to $500,000 per account if the broker takes money and doesn't buy securities. Ultimately, that $500,000 is funded by members paying dues on Wall Street. In this instance, Bernie's case, this is what SIPC is made for. You know, if you make an investment, they don't invest your money and just take it.
It's a fund you can pull from.
Supposedly. The only problem with that is that SIPC didn't have the funds to cover all of Madoff's clients without going bankrupt.
Yeah, 19 or 50, 64 million billion.
Well, in the documentary that I was watching, it actually said that SIPC only required $150 per firm as the annual fee.
Oh my gosh. That's
Per
nothing.
firm, not even per account, you know, nothing like that. It was per firm.
You're looking at like a regular little college savings fund then.
You're looking at maybe $5,000.
Wow.
You know? Yeah.
Yeah, they definitely didn't have enough.
So with that, they decided to bring in Irvin Pickard to take over as Madoff's trustee. He was responsible for liquidating the company and figuring out who was owed what. He developed a formula to determine who was considered to be a net loser versus a net winner. Net winners were people who invested into Madoff and over time withdrew more from their account than they contributed. So a net loser was the exact opposite.
Yeah, you're actually out of money.
Yeah, like you're out of it. With that, a lot of these were people who were smaller, older investors who invested their retirement savings in Madoff and were living off of the profits that they were supposedly making, you know? So unfortunately, it sounds like it was, you know, all of these big billionaires who were the net winners, but actually it was regular people who just happened to be pulling money out because they assumed that they were making that, you know?
Dang.
You used it to fund anything from college graduations to, you know, medical expenses, things like that. And
Yeah.
now you're considered a net winner.
Yeah, you think you got a great return on your investment. Oh, I'm going to use those funds, you know, to invest in this goal or something.
You're right. And now, being a net winner, it was determined that those were the people who needed to pay back the money.
Damn.
Unfortunately, yeah.
They had to pay the money back?
Yeah. They issued
What?
several hundred lawsuits, and these lawsuits were called clawback lawsuits.
I'd be pissed. Not only was I defrauded, but now I have to pay the money back and there's a lawsuit against me. Oh, I'd be pitchforking right now.
Yeah, so virtually what Pickard was doing was taking money from one investor and giving it to another. This left a lot of families in rough spots. Through all of the actions of Pickhour, he was able to recover about $7.2 billion from the Pickhour, not Pickard, from the Pickhour estate after Pickhour died from a heart attack in his pool at the age of 67. With that, he had to like sue the estate, and it was actually Pickhour's wife who over time paid the $7.2 billion. Bernie was sentenced to 150 years in prison for his actions in the Ponzi scheme. Peter was sentenced to 10 years in federal prison, his brother.
Oh.
The compliance officer. Yeah.
Right. Right.
Frank DePascali, you know, because he cooperated with the government, the sentence was postponed until after the government case was finished. But after the case was finished, Frank contracted lung cancer and died within 4 weeks, never being sentenced. Mark, his oldest son, committed suicide on the 2-year anniversary of the day of his father telling him about the scheme.
This got really dark.
Yeah. And Andy, his second son, died of lymphoma 6 years after his father's arrest. He once said that his father's crime killed his brother quickly and it killed him slowly.
I'm like genuinely speechless. I didn't know that happened.
Yeah. And Bernie himself, he died in prison at the age of 82.
That was fairly recently then.
Yeah, not too long ago. I mean, the whole thing exploded in 2008.
Where's Ruth? Man, I hope she's living her
Yeah,
best life in Florida or
after
something.
her sons passed, she like moved into an apartment by herself and kind of like stayed to herself. The buzz around Madoff and the Madoff name kind of made life a little bit difficult for them.
Absolutely. If I was her, I'd probably go back to like my maiden name or something. Like,
Exactly.
oh man,
And
what
then
the
speaking of the
fallout?
victims, like you said, they were just being victimized again. If you haven't seen the Bernie Madoff's Netflix special, it's a four-part episode series. I definitely suggest giving it a watch because it's a lot more information than I provided here as far as in witness accounts. Because it's more directly speaking to a lot of them. That was a good thing. A lot of them were actual people or actual family members of victims because a lot of the victims of Bernie Madoff's Ponzi scheme, aren't alive today, honestly.
Yeah.
And what happened is that they originally invested into Bernie. They passed, their account got inherited by a family member.
Who
They passed,
inherited them?
inherited again, and now that person is the also a victim
Yep.
or in some cases was considered a net winner, so they had to
Mhm.
pay the money back.
Oh my gosh, the generational impact. It's so interesting how a financial crime, only money, like there was no murder in this. There was no, anybody getting beat up and thrown off a train, but the impact still resulted in some form of violence, an actual death because of the pain it caused to people. Like, just financial pain can cause psychological damage akin to death.
Yeah, in the video, one of the couples that was actually in the last episode, they were a victim of it, and they were considered what was net winners. And you could see the pain in the guy's face just talking about it because they not only lost, all of their savings.
Yeah.
These are on average 70-year-olds. A lot of them can't go back to work.
No, they can't.
They not only lose their entire savings and everything that they know, but a lot of them lost their houses. They lost their means to live.
I feel like that's not right. Like, they are just as much victims of this, and that they shouldn't be forced to pay back money that they believed they had made, that they rightfully took out and used. That's just, I feel like that's not a resolution that the government should have taken.
Yeah.
They shouldn't have gone after them.
There's a lot of money elsewhere that definitely could have been accounted for. Like they ended up suing the top four, his big four investors.
Yeah,
Like I said, they got
exactly. Go
like
after
set
them.
they got like 7.2 billion from the Pick Hours estate. They got like 220 billion from like the Shapiro, or not billion, sorry, 220 million from the Shapiro estate, like so they were accumulating money, but I don't think
But
that they
keep
had a
asking them for it
yeah, I
then.
don't I don't think that they had necessarily like a line drawn as to where, you know, they would consider that money to just be a loss.
That's not
Yeah,
right.
Irving Pickard, he was like credited for all of the money that he brought back. I think he ended up uh, securing like 1 point something billion dollars totally.
Wow.
He also made a lot of money at the same time, that's the thing. So you were making money after money and like
How are
finding
you?
money, but you were
Yeah.
still asking these people with no money to provide,
Right.
where was the line? That's
Yeah.
what I wanted to know. Where was the actual line?
I would have gone after the richest people involved, and the ones that you would think, smoking gun, like they had to have known something was fishy,
But
not
then
the people that were literally victimized.
yeah, but then I would also do things like hold the SEC more accountable. Like you allowed this to happen.
Right, that part.
A slap on the wrist. I'm pretty sure they were like brought before Congress and stuff. Questioned, but like that's not enough. Like you are
The
the
reason it
law.
happened, but you're also the reason that it fell through the cracks
Yeah,
many
many
times.
times.
That's the most disappointing part, is like it wasn't even because of some elaborate scheme and
By
smart
no
trickery.
means. By no
Like, he
means.
literally just psychologically outmaneuvered you and you didn't do your job.
Yeah,
Like, he gave
unfortunately.
you numbers and you didn't even check them.
Or you just assumed and believed. You know.
That's unacceptable.
You have questions about his hedge fund and he tells you, I don't have a hedge fund, and you accept that as the answer.
That is very sad, though, also, like, what happened to his family, his sons. I mean, evil money.
Yeah, evil money. Now that makes me a little bit more skeptical about everything that happens on Wall Street.
Yeah, I think my takeaways from this are starting to become be very skeptical of people who seem like they're
Yeah.
doing very
Yeah,
good.
charitable people.
Charitable, giving people should be put under a microscope
Yeah.
because there might be something else there.
They're
I
trying
don't
to-
like that they're setting that standard.
Yeah, I think it's them trying to buy back their karma or something, you know.
Or just to deflect suspicion.
That would be a good
Why
reason.
would you suspect, that the most giving person in the room was actually the con artist?
Right. That's actually a really good one.
Which is why now I'm skeptical of giving people.
Don't be a giver.
But that's bad.
Yeah.
Oh my God, this is terrible. But that was fascinating. Okay, Bernie Madoff. Wow, what
Bernie
a con
Madoff
artist.
in the bag.
But thank you so much, James, for covering Bernie Madoff. That was really interesting.
Thank you so much for listening. Really appreciate it.
We'll be back next Thursday with another exciting Evil Money episode. Be sure to like and subscribe if you haven't already. And thanks so much for tuning in. Bye.
Bye.